Okay, everybody, welcome to the Drexel intro call, the opportunity call with Drexel Brothers. My name's Chris Perez. I am the current acting CEO of Drexel Brothers. I mentioned earlier I do these introduction to the business calls every Tuesday, Wednesday, Thursday at noon. So if you know anybody who's looking for the next opportunity out there, drive them to the call. And this is a very quick introduction call to commercial lending and the opportunity in general, not just about Drexel Brothers. Okay, I'd like to get started and talk to you guys a little bit about who Drexel Brothers is. Drexel Brothers is what we like to call a hybrid technology/finance company. What we really are is we are a reboot of a company that I built throughout the years called Commercial Loan Capital. Commercial Loan Capital, up until 2008, the market collapsed, was one of the largest correspondent lenders in the country. We had about 17,000 mortgage brokers under our umbrella with over $1 billion in commercial loan origination under our belt. We were a very, very large packaging engine for companies such as that you may have heard of, Lehman Brothers, but a lot of wholesalers that you wouldn't, that we worked with. And what happened to that company is that when lending stopped, our lending sources, we were directly tied to the lending sources. So when all of these lending sources and lending dried up, so did our big company we had built over the years. Now, what's really fun for me and for the Drexel team is we actually get to go back in a time machine and build a better business. And that is the neatest thing in the world that for people to get an opportunity. It's rare in life, they say, hindsight's 20/20. In our case, it's actually not. We get to go back in 2008 and see the waterfall coming in our time machine and say, man, what could we have done differently to have survived the market collapse? And we get to actually build a better business, a recession-proof business, multiple, and how we've effectively done that in 2014 is we built a company built around unparalleled technology and customer service with multiple revenue streams. The analogy I like to use about our company in 2008 was we were the Titanic. We hit the iceberg and we went under, and that was that. The company that we have here, Drexel Brothers, today is more like a modern ship. If we hit an iceberg, because all businesses are cyclical, if we hit an iceberg, we get to seal off that compartment, and we have 8+ linear revenue streams to keep the ship afloat and keep you and us making money. So what we've done is we've built a better business, and that's technology and multiple revenue streams, unlike our prior company, our large commercial lending company of the past. So that's really who Drexel Brothers is. We've actually come out with the first of its kind lending app for a smartphone or tablet where a commercial real estate broker or borrower can actually go on their smartphone and actually get an instant pre-approval for a commercial property or business loan. We were going to get the consumer's loan, but I have to limit our time today on how much information I can give you in one small call. So we're going to focus on commercial real estate. So our technology is app-based where somebody can get an instant pre-approval. Now, what's really cool about this app, and this is the first time ever, this application will allow a borrower access to Wall Street money or private financing or wholesale money that they would not normally have access to. Wholesalers do not advertise loan programs to the general public. This is actually a direct bridge to that money via smartphone or tablet. So now anybody instantly has access to private money or Wall Street money. Believe me, it's revolutionary. It's patent-pending technology that we've come out with. We have the first of its kind app that does this out there. No other company has what we have on the technology side. So that's a little bit about Drexel Brothers. Now I actually want to get into what's more important, the opportunity that lies ahead today for everybody on this phone, including myself. What's occurring has never happened in history before. There is a perfect storm that is occurring in the lending world that people are going to be able to capitalize on and get wealthy. And I'm going to start with the first leg of this perfect storm, I call it, and that's Wall Street. Now, Wall Street answers to Fortune 500 companies. And again, what I want to talk about today is I'm going to put things in very simplistic terms. So Wall Street answers to, say, GM or Chrysler, their pension funds. because Wall Street is entrusted with that pension fund to go get a return for a Fortune 500 company that has tens of thousands of employees, okay? So Wall Street, first leg of the perfect storm. What happened in 2008 when the market collapsed in on itself, trillions, and I'm going to use this term a lot. This is an odd one, trillions with a T. Trillions of dollars in 2008 went into very deep pockets when the market imploded in on itself. I equate money to energy back then. That money did not burn up. It didn't disappear. It just went into very deep pockets. And it's been sitting there for 6 long years through this recession, okay? What is happening today, now the recession is loosening a little bit and unemployment is dropping and real estate is coming back, is that Wall Street is having a lot of pressure put on them by these Fortune 500 companies. Chrysler, GM, these big pension funds, they need a return on their money invested for their employees. They need a return on these trillions of dollars. So Wall Street is about to flood the market with trillions of dollars of money. Okay? Now, the most logical place is not the stock market. The stock market is too volatile. So where Wall Street is going to invest that money is in real estate. They call it CMBS, commercial mortgage-backed securities. To you and me, it's a commercial loan, okay? And they're going to put a wave, a tidal wave of money on the street. Trillions of dollars are about to go into circulation, into lending, because it's real estate backed. There's collateral securitizing these loans, okay? So if the loan goes bad, there's a piece of property or an asset behind it. So that's the first leg of what's occurring, is about $1 trillion in loans is about to flood the market, okay, across the United States. Now, the second part of this perfect storm is that over the next 3 to 5 years, there's going to be over $1 trillion in commercial mortgage balloons that are coming due, where borrowers are going to have to refinance these loans. Now, why this isn't a part of a perfect storm is that a lot of these loans, the lenders that originally had done the loans no longer exist. Okay, they've gone out of business. So what that means is a balloon that comes due. Most commercial loans have a balloon. They're not 25-year fixed deals like a residential mortgage. Commercial has a balloon. So within 3 to 5 years, a borrower has to do something. Now, here's the deal. If the original lender doesn't exist, they went out of business, these loans they're currently being serviced by servicing companies. A servicing company cannot refinance that loan. So you have $1 trillion, in ballooning loans over the next 3 to 5 years that have to go to new lenders. Okay. Now remember what I said 2 minutes ago. Wall Street is about to flood the market with trillions of dollars of money, and they're looking for commercial mortgage-backed securities, okay, real estate loans. And oh, by the way, there's $1 trillion in ballooning real estate loans. Interesting. Anybody that is in the middle of this T word, this trillions, can and will get wealthy, okay? That's the opportunity that's in front of us. There's going to be a wash of money that's changing hands, and anybody that's involved in the middle of it is going to get wealthy and reap all the benefits, okay? Now, it is a perfect storm. That's just 2 storm fronts colliding. The third piece of this perfect storm is that banks have all been but federally regulated out of lending. There's a lot of requirements. When the market collapsed, a lot of people had to, new guidelines came about, and one of the big things is the Fed took a hard look at banks. Now, banks answer to the Fed because they're federally regulated, and they're also federally insured. So banks have been really federally regulated out of lending, and what I mean by that is, let's start with part 1, liquidity. Quick lesson in liquidity. A bank, if you were, in simplest terms, if you were to borrow $1,000 from a bank in 2007, the bank needed a requirement of, say, $500 cash in liquid asset reserve to give you $1,000. They hand you $1,000, they only need $500 in that account. Fast forward to 2014, if you wanted to borrow that same $1,000 from that bank, The bank's requirement now is $2,000. So for you to borrow $1,000, they got to have $1,000 cash on hand. So banks have, by liquidity requirements, it's a lot tougher for them to actually lend money. Now, there's two other reasons why banks are out of this lending frenzy. The second thing is banks have strict regulations on credit. Anybody who is in the fair to poor credit category is out. This is no longer a gray area. The days of the handshake banking, even if you've been with your bank for 25 years and put $1 million through your accounts, if your credit falls below a certain criteria, that 700 or 680 middle FICO score, you are out. They cannot give you a loan, okay? So in this tight market, lending market, anybody who has a fair or low credit score is out with a bank. Now, the third thing is businesses that show losses on their tax returns cannot get a bank-type loan, period. Okay? Losses on the tax returns, no money. Okay? So think about that. Now, I'm going to put it all together really neat for you. You have Wall Street that's going to flood the market with trillions of dollars of loans, and they're looking for commercial-backed real estate. You have $1 trillion in real estate loans that are coming due over the next 3 to 5 years that have to go to new lending sources. And oh, by the way, banks are not in the mix of this. And there you have the perfect storm of lending that is occurring. Anybody that is in the middle, helping facilitate these transactions, can and will get wealthy. Okay? Now, there is actually a bigger story here, and now I actually want to take into Drexel Brothers and who we are. The reason Drexel Brothers is existing was brought back to life is because Wall Street wants Drexel Brothers back to life. Big investment banks, they want all of these loans, and what we do is we manufacture the raw materials, the loans, and then we create thousands of them, and then Wall Street does their magic to it and creates a bond out of that, and then they sell that to the pension funds, okay? Wall Street does not want to do what everybody on this phone is going to be doing or what Drexel Brothers is doing. They don't want to go out and find Joe restaurant owner or hair salon down the street. Wall Street doesn't do that. Wall Street doesn't want to train people of how to be on the other side of the table with them and how to be in this business of lending. No, they don't want to do that. You can try and call Goldman Sachs. I try to call them. If your net worth isn't $10 million, they're not even answering the phone. Believe me, okay? So what Drexel Brothers is doing is, just like our prior company, we are manufacturing the raw materials. We're the guys and gals on the street that are finding people who need money, and that's everybody, and we're facilitating these transactions for Wall Street and the wholesalers, okay? So that's really what our function is to go out and get these deals, and that's what we're doing. Now, here's the opportunity. How do you get involved with Drexel Brothers? How do you get involved, and how do you get involved in this lending frenzy that is about to occur? It's pretty simple. If you're a real estate agent or a commercial real estate broker or you're a mortgage broker, start submitting deals. We have about 17-plus lending sources. We are diversified out. We not only do commercial real estate, we do business loans, and then come fall, we actually have a consumers app that's going to be coming out. So literally, Drexel Brothers is going to be all lending, cradle to grave. So if you're in our business, start submitting loans and let's start making some money together. It's very simplistic. You're going to know your deals. You're going to know your deals that need financing, and then you can just get involved and we'll start making you a lot of money, okay? So it's simple as that. Drexel Brothers is going to be all lending. What's interesting for people that are not in the business or in the business is, yeah, you might do a commercial real estate loan and make $15,000, but we have technology now, cradle-to-grave lending, where we're going to be that particular client's lending source for a lifetime of loans. This is how we've built a better business. I don't want to spend too much time into that, but what I can tell you now is when you make money with us with a client, you're probably going to make money for a lifetime on that client. That's how we built a better business. Okay, now, for anybody that is not in the business, what I want everybody to do, if you don't know what's going on, or if you're not from the commercial lending world or the lending world at all, if you're not in real estate or finance, I need you to go on Google, and I want you to Google commercial lending, and I want you to see what's out there. Okay, do not take my word for it. I want you to do a little bit of homework. It's important that you understand what's going on. Okay, Download our app. Play around with them. We have a commercial real estate app, and we now have a business loan app. Download it. Put in a mock scenario so you can see what our technology can do for you. Our cell phone technology makes anybody a 25-year veteran of commercial lending. The president of our company, Megan Krejci, one of the coolest things that she always says is, let our technology work for you. I am a pioneer in this business. I'm very well published on this business, but guess what? If I go in a meeting with somebody who has a loan and I don't have my smartphone and a college student has their smartphone, they have more power than I do. And I've been doing this for a very long time. So the technology, let it work for you because it will make you money. So I want you to do a little research so you see what's happening. See the stories about Goldman Sachs and Chase and all these commercial lending stories and where this money's going. Trillions of dollars in ballooning loans. Don't take my word for it. I want you to do your homework to see, because it's in plain sight if you know where to look for it. One of the fun places for me every morning is on our actual app. There's a news button. Every morning when I have my first cup of coffee, I click on news on our own app, and it tells me about who's doing what in commercial lending. Use the news button. All the stories are right there, okay? Now, after you do your homework and say, man, wow, this is an amazing opportunity, how do I get in? Okay, if you are not from our business, what Drexel Brothers has put together one of the most extensive training courses that has been invented. We do a 10-week live sessions where we have a syllabus of 10 live courses, and then the other 10 classes twice a week are with industry experts and Wall Street insiders. So we do training. We have a training portal that has an origination guide, 100 pages. There's 12 videos there. It's very interactive, our training program. Now, go through the training program. What's really neat is once you become Drexel certified, you have to go through 10 modules and pass a test. But once you have that Drexel certificate with an 80 or better, now what we do for our agents, the people that are going to represent Drexel Brothers and have Drexel Brothers business cards, is we're actually going to help launch your business with clients and leads, and we're going to assure your success. The cool thing about what we do and what I love and I'm proud of is we only make money when our reps make money, our brokers, real estate agents, and our loan procurement managers that actually represent Drexel Brothers. But here's the beautiful part if you're not from this business. You can earn while you learn. We just need to get you certified, and then we will make you an industry expert, but over that time period, you're actually going to be working with real clients and real loan scenarios, making real money, okay? We provide a lot of data. We have mortgage brokers that we can assign out. We actually pull data on ballooning loans. Our app is instant loans that if people are looking, we're going to assign these out. So we're going to have a wash of leads for our loan procurement managers. We're not a leads company, but we are going to assure everybody who gets involved directly with us that we're going to assure that you're going to, if you're really willing to work hard, that we're going to make you a ton of money. Now, what can you expect to make? Let's get down to it and really talk about dollars and cents of what a loan procurement manager and brokers and real estate agents. You guys know what you can make on these deals, but let's talk about a Drexel LPM. A Drexel LPM based on our commission structure now. Now this is on a deal, whether you bring a deal, it's your dry cleaner down the street, or whether it's a lead that we give you. We pay out a 40% commission on closed loans, and I'm only going to focus on real estate today. 40%. Now what does that mean? And that's a good question if you just said that to yourself. What is 40% of what? All deals and scenarios are different. So what I can give you is I can give you history and what the averages are on a closed commercial loan transaction. A Drexel LPM can expect to make anywhere from $3,000 to $7,000 per single loan transaction. Okay, I'm going to repeat that. A Drexel LPM on a single loan transaction can make anywhere from $3,000 to $7,000 per closed deal based on our history of doing this for a very long time. Now, you'll have some loans that will bring in a little less fee, and you'll have some loans that will bring in astronomical fee, okay? But the average is $3,000 to $7,000 a deal closed. What I can tell you is that, think about it, just do some simple math. If you close a deal or two a month, you're making a significant side income. Some people call that full-time income. If you are closing 4 and 5 deals a month, you are in the 1% of the population. You are easily making $150,000 to $200,000 a year. Okay? And that's just based on our industry averages of the type of loans that we do, okay, and the type of loans that you'll be doing. Now, who can get into this opportunity? Do you have to have an MBA in finance? Do you have to have an Ivy League degree? Absolutely not. This opportunity and what we're doing here at Drexel Brothers is giving everybody the opportunity to sit on the other side of the table where Wall Street and the haves sit. Okay? That's what we're doing. This business is for anybody who's willing to roll up their sleeves, do a little bit of work, and you can get wealthy, period. It's for a college student who just got out of school and can't find a job. It's for a senior that maybe the retirement, they're looking to supplement that retirement. It's for the most sophisticated real estate broker or mortgage broker to a stay-at-home mom. In our prior company, we had bartenders and bouncers making $20,000 to $30,000 a month. Our processors never made less than $250,000 a year. Okay? Now the opportunity in this market, 2014, makes our last run look pedestrian. This is going to be real money involved now. People are going to make millions and millions of dollars. Okay? Now here's really another part of the perfect storm that I may or may not, but it's important enough for me to talk about it. Wall Street does not want to be on the field, okay? They don't want to be playing the game at the field level. We are the baseball players. We're on the diamond. Wall Street is the owners up in the box looking down. They don't want to do what we do, but now we're on the same team with them. And we're going to make real money doing this, and we have for many, many years. Now, Drexel Brothers, what we've done is now given you the technology that nobody else has out there. We give you multiple revenue streams and a lifetime of closed deals with a single client, and we give you everything that you need as far as training and support to make sure that everybody's successful. Our success is based on our agents' success. What I would suggest everybody does is seriously, regardless, I want to set Drexel Brothers aside for a minute because I'm the Drexel cheerleader, obviously. But I want to set our company aside. Do your homework. Look at what's occurring. It is in plain sight. There are a couple movies that I want you to actually go out and rent if you haven't seen them. There's a movie called Too Big to Fail. It is a dramatization of what happened to the market collapse because I want everybody, if you don't know, I want you to watch that movie because it's a dramatization. It's a good movie to watch. It's fun to watch, and it gives you an idea of how close to the brink of destruction we came. But there's also a second movie called The Inside Job. Now, this is a documentary that was narrated by Matt Damon. I'm going to tell you this. If you watch this movie, I'm going to tell you two things are going to happen. Number one, you're going to be very upset. You're going to get angry because nobody was penalized on the upper echelon of this whole market disaster. Us, the taxpayers, paid for this whole disaster. And everybody else made millions of dollars that were at the top, including our government, okay? So the Fed is very closely connected to Wall Street, and you will see in this movie. Now, the second thing that you'll take away after hearing me talk today is this. Wall Street is bigger than it ever was. The banks, the investment banks, are bigger than they ever were. They're involved in the Fed. They are huge now. They are too big to fail. They run it all. This is your opportunity to sit on their side of the table. 1 + 1, okay? If you do your homework, you'll get it. And that's regardless if you're working with Drexel Brothers. If you're looking for a new way to make money or looking to get wealthy, there is no other faster way that I see in existence right now other than getting into the lending business right here in 2014. I have not seen anything bigger than what's occurring. And it's all there, and you can Google it. I want you to watch these movies. And again, what we're going to do for you is we're going to make sure that everybody makes money and can get into this business, whether you're the most sophisticated financial person with a financial background or you're a stay-at-home mom and you're just looking to do something on the side and make a couple bucks each month extra to pay some bills. So that's what we're doing here at Drexel. I I welcome everybody aboard if you do want to join our team. Again, if you do want to get directly involved with the Drexel LPM program, just go to our website. It's drexelbrothers.com. If you have any questions while you're doing your due diligence, please email us at info@drexelbrothers.com. And you can actually just address it directly to me, Chris. I am accessible to everyone. If you ever do want to access me, just all I ask is be a little patient with my time. But I do have a vested interest to make sure that everybody is very knowledgeable on what we're doing and making money. We're looking to corner the market of lending, and we're going to do so. Drexel Brothers it stands to be one of the biggest commercial or lender wholesalers in the country by far. And that's not just me saying that. It's the lenders that are saying that, because the lenders don't want to do what Drexel Brothers does. And that's the big opportunity by being a part of our team. Is the only reason we exist is Wall Street has called us up to bat again. And now here we go again, except we have superior technology and more ways to make money. I do have some, okay, I got done this pretty quick, so what I'm going to do now is I'm going to unmute the call, and if anybody has any questions for me, fire away, and I'm going to unmute us now. Okay, guys, that is a lot of information that I gave you in a half-hour's period of time. Does anybody have any questions for me?
Well, how you doing, Chris? This is Bill Hubbard with First Merchants. How you doing, sir?
Hey, Bill, how you doing, bud?
Man, I am excited. First of all, let me say, excuse me for my voice. I've been fighting a cold here for the last day and a half or so.
No problem.
I went through the programs that you have, and being that I've been in the financial industry and I'm a former SBA loan officer, I can commend on what you're doing, because for the last 15 years I've been doing small business loans, cash advances all over the state of North Carolina.
Fantastic. Fantastic. Well, I appreciate you. I appreciate you chiming in, and you're an insider, so you know what's occurring. You know that stated commercial loans and blanket commercial real estate. This stuff hasn't existed for 6 years. It's all coming back. All of the wholesalers are competing to get their programs out there. Guys and gals like us, we have billions, if not trillions, of dollars to put on the street. It's happening right now. So, you know, Bill, welcome aboard, bud. Let's get some deals moving. I can't wait to start handing you checks for $20,000 and $30,000, because that's what they look like on the bigger deals. And you can attest to that, right?
I can. Very much. I want to ask one question. What about a company like, we have 3 offices here in 3 different cities in North Carolina. Yes. What do you have in place to prevent a gentleman or someone to try to circumvent First Merchants?
All you have to do, and that's a good question, okay, you're from the business, you have mortgage shops, so all you have to do is register your company, or you can register your agents that are out there representing you, and your shop will get an override on their production. So, we protect our brokers, and we do that. So that's something that would be, I would have to talk to you offline, and we would set up things like that. But, what happens in our business, and it's very common, is, you bring our programs into your shop, your mortgage broker shop, and then you get, somebody who's bright, who's working there saying, man, I can go make, $10,000, even though these guys are paying for my rent and my phones and everything. But if I was to go to them direct, I can make $20,000, and I'll work off your nickel. You pay all the expense, and I'll do a little side deal and make all the money. Now we'll protect you out, but that's a conversation we'll talk offline though. So, and I have your email. I'll shoot you an email. I got an email from you earlier, so I'll shoot you an email. But we do protect our brokers and the integrity of their shops. Absolutely.
Great. Thank you very much.
Okay. Does anybody else have any questions for me?
Yes, I have one. It has reference to your training class. You say it's 10 weeks long. When does the next class start? And is this a full-time effort then during the trainings portion of it?
Not at all. And that is actually a wonderful, wonderful question. I like where you're at. Here's the deal. No, it's a part-time opportunity. It's a full-time opportunity. We run our live training courses. They reset every 10 weeks. So there's 10 of those classes. They're done on Tuesdays. 10 of those classes will reset every 10 weeks. It's just it's a formal syllabus. So we talk about origination, we talk about executive summary, the workflow process. Then the second class that is every week in that 10-week is guest speakers from Wall Street insiders. I mean, we're going to blow people away by the guests that we have on these lines. So they're going to teach you the inside from the investment bank world. So that 10-week cycle is always continuous. Now, if you jumped in this week, the next training course would be on Thursday. We have one today, but if you jumped in, say, tomorrow, your first live class would be a guest speaker on Thursday, and they just reset. So you would get the calendar. So you may start at class 5 or you may start at class 1. Now, that's just the live sessions. Inside our training portal, there are 12 videos that you can go through at your leisure. There's an origination guide. If you're not from our business, print this guide out, okay? It is the manual for our business, okay? I happen to write it. Read it. Keep it on hand. If you're not from the business, come on. It's like anything. You have to know your business. Now, what I love about what we do for our reps is this. You do some basic training, but you can start immediate. There are some modules. Once you go through some videos and you feel pretty confident, you're going to click on a button, and it's about 10 modules. It takes about 2 hours, okay, an hour and a half, 2 hours. And at the end of those modules, you're learning through the modules. It's all interactive. It's really cool stuff that we put together. There's a test. And you can take the test as many times as you want. But the moment that you have an 80 on that test, you're going to come to us and say to Megan, hey, Megan, I passed the test. And then what Megan's going to say is, listen, okay, we do understand that you have to finish the course and go through everything, but we want you running deals now. And we're going to give you clients, and we're going to make calls with you to make sure that you're comfortable, because we can get you making money while you go through all this. Now, I've seen people get through the modules in a day or two. I've had people sign up and they're with us a month and they never do anything. So it's really you, but it's not something where you have to quit your day job. The live sessions are every week for an hour, so it's 2 hours a week during the afternoon at 1 o'clock. Now, we are going to be recording and videotaping a lot of this material, and it'll be inside the educational portal. So, you know, we understand people have day jobs. I'm not telling anybody to quit their day job because it does take time like any business. But we are going to make sure that you're in deals and going to be looking at pipeline and be closing deals way before you become an industry expert. We're not asking that, unlike any other training where you go to law school and you can't have your first case until you pass the bar. Our business is a little bit different. We're going to get you on the street. We're going to get you working on deals on a part-time basis, and you'll learn it at your pace. So the live courses, they just reset every 10 weeks. So whenever you jump in, it'll be, you know, class 4 or 5. But it'll all be online if you have to miss a class, or if you just say, man, that was a mind-blowing one, because there is a couple classes that are really, really important that I want you to always do a live class on origination and the executive summary. If you do those two things, I can make you an expert really fast. But it'll all be online at your pace. But anybody can do this. You can do it part-time, full-time. You know, and you can. Our biggest kind of catchphrase internal is you earn while you learn. So hopefully that answered your question.
Okay, thanks.
Yeah, you're welcome. Does anybody have anything else for me?
Yes. This is Gerald from Minnesota.
Hi, Gerald.
Hi. How are you, Chris?
I am fantastic. What you got for me?
Yes, I just have a question. So, what is the name of your company's app?
It's Drexel Brothers. Yeah, it's on Android and iPhone. It's Drexel Brothers Commercial Loan Suite, or Drexel Brothers Suite. Okay. And you can actually go in the App Store on iPhone or Android. But if you do go to our website, drexelbrothers.com, it'll tell you the links of where you go in the apps to download these apps. So right now, we have two independent apps available. One is for commercial real estate, and one is for business loans. Now, in the fall, we're going to have one that's going to be for consumers loans. So if you need an auto loan or a medical loan or a mortgage, that's going to be our third, and that'll complete our app trilogy. So what we've effectively done is we have 3 apps that encompass all of lending. What that means for you is, as a consumer, yeah, you can access kind of the best deals right on your smartphone for all lending. But as a Drexel agent or as a mortgage broker, what it means for you is you make money for a single client for a lifetime. Because here's what happens. If you go out and do a real estate loan for a guy and the guy loves you and says, man, you got this done, my bank was saying no. Well, our internal technology is gathering information where we're going to be able to lend to this person for a lifetime. And what that means for you guys is you get paid for a lifetime. Now, I can't get too much into that because I'm just on limited time, so I want to focus on real estate. But always keep in mind, we've built a better business. The funnest thing for me is I literally got to go back in a time machine and build a better business for all of us.
Right.
And that's the situation it's in. It's really wild. I mean, it amazes me that I have this opportunity to do this all over again. But now when the waterfall is coming, we survive. We don't go away. We're not directly tied to commercial real estate financing. We're going to be lending people money for the rest of their lives. Every need they have, education, dental work. We're going to have it all. That's what these apps are about, is diversification. That's what makes us really strong this time around. So you get one good client that knows your name on a regular basis. If they ever borrow any type of lending, you're going to get a commission. And that's cool.
Yeah, that's very cool. Now, someone like me who's starting out, brand spanking new in this industry,
yes.
I've done some research on commercial lending, so I know there's a huge demand for it.
Yeah.
So I saw the opportunity, and I know it's something that I'd be really good at. So in regards to getting started out, did you mention just go to the website?
Yes. You want to. Here's what you do. If I'm sitting on the other side of the table, and don't. Okay, I'm a cheerleader, but I'm also a salesman. But I don't want to. I'm not trying to sell you something, because here's the deal. The reason I want everybody on the phone to get involved in this, and the reason I've set it up the way that I've set it up, is that we have an opportunity to corner the entire lending industry by people. So if I get 1,000 reps on the street, every single lender in the United States bows down to us. And what I mean by that, bow down to us, meaning we make more money. You make more money, I make more money. So get involved now. Start your training courses. You're going to get personal emails from me. There's classes that are vital. I do want to explain something to you because you got it, and it sounds like you got some sales background. So here's the deal. I want to give you a quick. Let me just see something here. Okay, I still got some time. All right, let me explain how I got into business, because this will translate directly to you. I had worked for a lender years ago when I got into the business, not residential, commercial. So usually guys start in residential and commercial. I worked for a lender. I learned the business. I knew where one wholesale lender was, and I kept seeing mortgage brokers make these astronomical commission checks, okay? Now, this is before social media, the internet, LinkedIn, all these cool things that people have today, okay? And I run a tech company, but I'm an old school banker. Even though I'm progressive, I'm an old school guy. So, but I got into the business. I knew a little bit about it, and I kept seeing these brokers make this tons of money. And I said, man, I'm going to do this. I got one lender in my pocket. Now, I was young. I didn't know what I was doing, and here's what I will tell you. I worked my butt off, and I had no fear. And what I did was I went out and I printed up some business cards, right? And you, as an LPM, can print up Drexel business cards. So what you're going to get as one of our agents is power. You have the website. You have the apps with the Drexel name. You represent Drexel Brothers. You are all money. I didn't have that. Print up some business cards. Here's how you get into business. Right here tomorrow. You sign up, you start your training, period. You got to learn the business. The more you learn, the more savvy you're going to get, the more money you'll make. That's in any business. Now, like any business, it's always on-the-job training. You know, you go to law school or you go to medical school. Guess when when you learn the business? When you're in surgery. You know, unfortunately, when you're in your first court case, that's when the learning really begins. So what I would recommend if you're a newbie is you get signed up, you begin. Start watching some videos. I know it's going to be boring and some of those things, but you just got to do it. You got to do it. But what I would do immediately, once you are signed up as an LPM, you can represent Drexel. Spend the $10 with Vistaprint and get yourself 250 business cards. I think they're 500 now. The format for Drexel business cards is on our website, and as an LPM, you now represent us. You're a loan procurement manager in the training phase. And then what I would do is, and how I got involved in this business is every business that I came in contact with every day, I would give a business card. I was this young guy on the street, and I would say, listen, I'm the lender for your area. I go drop off my dry cleaning, I'd give them a card. Pizza shop, I'm getting a slice, I'd give my card to the manager. Now, this is, again, without LinkedIn, Facebook, all this cool stuff, Craigslist, I didn't have any of this. I just had some business cards, and I had one lender. And I was relentless at it, though. I gave out like 500 business cards in a month and a half. Now, that's with one lending source, and no sophistication and none of this app stuff and all this. It took me 90 days to close my first deal. And believe me, I was starving. Now, I couldn't do what I did back then. I have a family now, but I went all in. But back then, I could have laid on somebody's couch, and if I had to, I literally had change in my pocket. And in 90 days, I closed my first loan. I made $27,000 my first closed transaction, okay? Now, here's where it got really exciting, though, because you say, man, 27 grand, one deal. Now, you know when it got cool? The following Friday, I closed my second deal, and I made $17,000. And I never had to look back financially until 2008, until the market collapsed. And that's how I got into the business, with a pocket full of business cards and one lender. And I built a multi-million-dollar business without any of the sophistication or the training or somebody like me helping me. Believe me, anybody can do this. If you're willing to roll up your sleeves and get into it, I'm going to tell you now, in 6 months, your life financially will change for the rest of your life if you put in the effort now. This is not something where you're going to sit on the couch and, you know what, believe it or not, you can sit on the couch and do this business if you're sophisticated, know how to get into LinkedIn groups, and you know how to do that. And, the cool thing about loan brokering or money brokering is you can do it from anywhere in the world. You need a cell phone and a laptop. You just got to get started. That's the deal. But it's cool. You can do this from anywhere. And the cool thing about what we do is we don't sell pencils, okay? I'm not selling rims or cars or anything. We sell money. I mean, it's the sexiest product of all. This is not, think about this. Now, you heard me talking about banks that are regulated out of lending. Here's how you want to be successful in a business, and this is almost any business, but raise your hand. If you raise your hand and say, listen, I got money, how many people through the recession need your money? Everybody?
Right.
Who can't, whether it's a business owner, a real estate owner, or somebody who needs a personal loan, because we're eventually going to get into consumers, not just yet. But if you raise your hand and say, I am the guy that is in Minnesota that has $1 billion, and I need to get this out on the street, if you raise your hand and tell a couple people about it, I can tell you right now, as right as rain, you will make money. That's it. I mean, it's a very simplistic business if you think about what we do. We raise our hand, hey, we have money. Do you qualify for that money? And here it is. And oh, by the way, I have more. I have lending for everything. So, that's what I would do. I would get on and I would get started immediately. If you've done your homework, then there's nothing holding you back. You just got to do it. I mean, I'd get involved in now because the rewards are coming. I mean, we have our first traditional advertising that's coming out where we're going to bring in deals. And this app, what's cool about the app is it's going to bring so much business because this isn't optional for real estate brokers. See, a real estate agent or real estate broker who shows a commercial property, it takes them weeks to months for that potential client to get their first pre-approval. Our technology gives them that first pre-approval in seconds with a phone call. Believe me, the real estate agents, once they adopt this technology, it's over. We will have tens of thousands of clients coming in the door, and I need people on the phone working these deals. That's why we pay out these ridiculous commissions, because I'm the type of guy, I'd rather make a little of a lot. I don't need to be greedy on these deals. I need you guys making money. If I hand you a check for $20,000, unlike corporate America that says, man, I got to lower the commission, I get jacked. I'm like, I think I made 20 grand. We're making money. Right?
Absolutely.
All right. I do have one of our formal classes that's coming up. I've kind of taken the reins on our training program. I'm going to be hiring professional sales trainers, but I want everybody to know that I'm in the trenches with you guys every day. It is. I'd like to think that I'm an okay guy, but it's not all altruistic. Your success is our success. Did somebody have a question for me?
Yeah, this is Bill Hubbard again. On the executive summary, do you want us to? Do you provide a format for? I'm on the website as we speak, and I have a couple of borrowers. And do we get the executive summary from the borrower, or do you have a formal executive summary format?
All you have to do with that executive summary is, and I'm actually have a class on that in about 10 minutes. The executive summary, fill it out completely. That's all you have to do. If you don't understand the question, still try and complete it. Get that executive summary over to us, and then we do the rest. We're going to come back to you, because here's what's interesting. You may get a borrower that says to you, hey, I need a hard money deal. Well, in reality, they need this deal. And that's where we're experts. Like, for instance, I have somebody who's in a deal that's upside down. It's a real estate deal, but I might be able to get them $100,000 next week while we're doing the real estate transaction that takes a little bit more time because you need an appraisal. So all I need from brokers is I need an executive summary. In 5 minutes, I'm going to tell you, here's what we need to do. Here's the documents we need. I'm going to close this loan this week. You're going to make X. And we're going to close the second loan in a week. So, hey, guys, I hate to cut this short, though, but I got a training class that I'm doing it in a couple minutes. Here's the deal. Info@Drexel Brothers. Direct the email to me. Say, hey, Chris, I was on your call. I was worried about this, or I have concerns about this, and I will get back to you individually, and I will email you all of my personal information. Just make sure it's addressed to Chris. I do have to cut this call short, though, because I got to go into a training. So if you do have a question where it sounds like a couple of you guys and gals may, just info@Drexel Brothers, and welcome aboard, everybody. And again, we're going to take care of you because it's our vested interest to do so. And do your homework if you're not from the industry. It sounds like a couple people on the phone get it, but it's right in plain sight, regardless if you ever work with us. This is a real opportunity to be on the side of the haves and the Wall Streeters, okay? Thank you for joining the call, everybody, and I'm here if you need me. info@DrexelBrothers.com. Thank you. Is there a way that I can, hang on one second. Okay, we are now recording the call, and I'm going to mute everybody out. Hang on for one. Okay, so today's live session is going to be about the executive summary. As I mentioned earlier, two of the most important aspects of our business are origination, what we talked about last week, and what we're going to go over today, the executive summary. If you can master both of these, where you can raise your hand and go get a client, and you can master this executive summary, you'll literally have the inside to this business and be able to qualify people out pretty quickly on your own and master the business. So this is an important one in origination. We're actually going to start recording these calls on a regular basis. So if you can't make a class or if you want to revisit, you'll be able to go into the back-end portal and you'll be able to get this information. So let me just pull up my executive summary here. Okay. Now, an executive summary, in the residential world, they call their executive summary a 1003. So if you ever hear the term 1003, it's just referring to a mortgage application. Now, our executive summary is a much more simplified version because the point of the executive summary really is to find out or qualify quickly if you have a real live deal. Now, the interesting thing moving forward, now that we're a diversified company as opposed to just doing commercial real estate like we were in 2008, is this. You're going to fill out the executive summary, and then Megan is going to qualify, or Trina is going to qualify that particular candidate out. Because here's what happens. You're going to have somebody that is going to come to you and say, hey, I have this restaurant deal, and I need hard money. And that's what they think they're going to need. But since we are so diversified now when we have these business loan programs, they walk in the door thinking they need one thing when we have a better solution for them. And it's happening more and more often because we do have business loans now, and eventually we're going to diversify into consumer loans. So this is just your guide, but it's a really important guide to learn our business. And I know we have a lot of folks that aren't from our business. So the executive summary is just really, really important coupled with origination. Okay, let's start with borrower's name. Simple enough. Borrower's first, last name. If they go by a middle name, put it in there. If it's a senior or junior or the third, make sure it's in there, complete name. Now the next one is very important. Legal borrowing entity. If they are a corporation, an LLC, a partnership, we need to know that information, okay? If it's a husband and wife partnership, we want to know that information. It is extremely important. I can't stress enough, deals can get sideways quick if we don't have the right entity because that may change the transaction or the lender we're using depending on what is the legal borrowing entity, okay? Borrower's email, simple enough. Borrower's phone number, get home, mobile, fax, email, multiple emails, website address, anything that you can get multiple contact points for these borrowers because people tend to get busy. It's the summertime. They go on vacations. I'm trying to put money in everybody's pocket immediately, so we always need multiple contact information, email address. It's all important, believe me. Don't get lackadaisical and not put in a second phone number or a home phone number because it slows down the transaction, and that means it's slower down for us to get you a commission check. So get as many contact points as possible. Okay, the next one. If you want to get paid, referring agent or LPM, use your name. Put your name in there. If you're using YAP, put your name in there. If it's a call-in, put your name in there. We monitor all this carefully, so we know that if a borrower comes in the door, it's going to be yours. If they try and come in and they're already registered with us and you brought them in, you're going to get paid for a lifetime on your clients. But wherever there's a space, if you're doing it online or on the application, just always put your name in there just to make sure that you're protected, and we protect you anyway. Okay, now, type of loan requested. And I'm going to get into this in another class, but I'm going to talk about it right now. In the grand scheme of commercial real estate financing, okay, and this is not business loans, this is something entirely different, but if we're talking about the world of commercial loans, real estate, there are three basic types of loans that somebody's doing a real estate transaction. That's going to be a bank rate type program where that borrower has a perfect FICO, great cash flow, $1 million net worth. They're bank rate type programs. Then the second category you're typically going to have is you're going to have a stated borrower. Stated just means losses on tax returns, okay, which automatically rules out every bank in the country. Love those deals. You're going to make the most money with those deals, and believe it or not, 70, 80, 90% of potential borrowers are going to have losses in their returns if they're in business, especially during the recession. So stated is where your money is. And then you have hard money. Now, something about hard money, higher interest rates, shorter terms, they close a lot faster. Two people that need hard money are typically a borrower that's struggling, that may have the losses on the tax returns, maybe their credit had taken some hits, or they may be an A borrower, they just need money really fast. So don't always think as hard money as scratch and dent, because you have very sophisticated borrowers that can go to the bank, but banks don't lend in a week. So they may need hard money. So I don't want you to ever look at hard money saying, oh, that's just bad credit or scratch and dent. We love scratch and dent as stated. That's where big fees come into play. People that need money in 7 days, that's where big fees come into play. That's where you're going to make the most income. So we call, if you look at our executive summary sheet, you got your full document bank type, and then you have bank alternate. We lumped it together, stated and hard money. We're calling that bank alternate, okay, just so there's only two options there. Loan amount requested, obviously that's important. One of the things that we don't have on our we do, we have it further down. Okay, so loan amount requested, it's either going to be a purchase or a cash out refinance or a refinance, so how much money are they looking to borrow? Fair market value. We want that for a purchase, or we want that for a cash out refinance or a refinance. So fair market value, all the fair market value is what their property is worth. Now, something that you have to know about fair market value, and this is important for you just so you don't waste time, and we have a class on qualifying, a specific class on that, but fair market value is very important to you because everybody thinks that their property is worth more than it is. That's human nature. You know, people are proud. You know, I built a deck on the back of my house myself. You know, I finished the basement myself. Everybody thinks that their property is worth more than it is. So when somebody gives you that fair market value, the next question out of your mouth needs to be, where did you come up with that number? And it may be, well, this is just what I'm figuring it is. That's not a really good answer, okay? Especially if it's a tight loan. So, but if it's, you know, I had an appraisal done last year, or the comps in my area, or my real estate broker told me that, drill down to that. But I just want you to know if it's a weak answer, like it's a guess, or this is what I feel it's worth. You know, I put $100,000 into the house, which the only thing that translates to real value increasing is the area itself goes up, the population and things like that, or if they build additional square footage, just so you know. But if they are giving it an answer based on pride of ownership, I just want you to know out of the gate that's probably not an indicator of what their property is really worth. So whenever you ask that fair market value question, find out where they got that number. Purchase price. It's only for a purchase. That's a pretty simple one. What are you buying the property for? Okay, for refinances or refinance cash out. This, believe it or not, is a loaded question and an important question. Original purchase price. Now, here's why. I'll give you a deal scenario. Guy says, I bought, you know, I'm looking for $1 million. My property's worth $2 million. And then we say, okay, well, what did you buy your property for? What was the original purchase price? Because you want to pull cash out refinance. And the guy says, well, I bought it a year ago for $100,000. Okay, big red flags. Even if this particular borrower got the deal of a lifetime and was able to buy $1 million property for $100,000, and now he wants to borrow $1 million out of the property cash out, the lenders are going to be very, very resistant to do that particular deal. Original purchase price is important because we want to know, wait a minute, how did you get the property on the deal? Was it a family deal? Was it the property willed to you? How did you get the property at such a low cost? Or it could be speculation on their part that they're thinking that their property is worth $2 million when in reality it's only worth $200,000 or $100,000. So that original purchase price is extremely important to see if you have a real deal there. You know, if they bought the property 5 years ago or 10 years ago for $500,000 and they're saying it's worth $1 million now, well, that may make sense. But original purchase price, it's a very important loaded question because it's going to give you an idea of what you're really dealing with here. Original, okay, so purchase price, original, okay, year purchase, that's important. When did they buy the property? Existing mortgage, okay. This is another loaded question because sometimes people have second mortgages that they think that they're credit lines or they're other things, but it's actually a second mortgage. So when you're asking that, what is your existing mortgage, how much do you owe on the property, just make sure that you're saying, is there a second on the property? Is there any other outstanding loans that may be tied to your property? Is your home mortgage tied to your commercial property? So sometimes people have other loans on that are considered actually second mortgages that they think they're credit lines when in reality they're actually a second mortgage. Okay? So current mortgage rate. Another extremely, extremely important question because here's the deal. If somebody was a paper or bank-type loan before the recession and they've taken some lumps and they're at 4% or 5% interest rate, and now we're doing a bank alternate loan which comes with higher rates, you want to know that out of the gate, you know, because they may have the expectation that, well, wait a minute, I'm at 6%, why aren't you refinancing me at 6% now? And you're going to have to, or we're going to give them we have to educate them and explain to them the market today that exists. Okay, so the existing mortgage rate is good because you want to get that out of the interest rate part of this out of the way as soon as possible because borrowers always are going to be negotiating a rate. Now, the unfortunate thing about the business that we're in when it comes to the rate is us as human beings are always, when it comes to real estate or property for some reason, we're always, what's the interest rate? What's the interest rate? What's the interest rate? But really, if you're a business owner or if you're in the business of property, it's really what's the rate of return as they're asking you. Because if somebody told you, hey, my interest rate's 25%, and then I handed you the money and you made 1,000%, the interest rate is irrelevant. Now, what's unusual is what the question they should be asking is, what's the rate of return for me as the borrower? What is going to be my rate of return on this deal? That's really the question that they're trying to get at, but we're just trained on what's the interest rate because one of the things that got us all in trouble years ago was, what happened was they said, the interest rate's 4%. What they didn't tell you was there's 10 points closing cost. Yeah, we can give you a nothing interest rate, but we're charging you ridiculous amount up front. And oh, by the way, the interest rate's only good for a year. So interest rate, that question that they fly out of their mouth right out of it is just human nature. You have to set the expectation up front because if they're trying to shop you and get below 5% and it's a deal that doesn't fit there, we would rather cut them loose in the beginning rather than waste a month of your time thinking that you have a deal closing when in reality they're going to shop you anyway. So the rate question is very important. Okay, next one. Also extremely important, use of funds. If you're getting a use of funds, a cash out refinance, somebody has equity in their property, they want to refinance out and they want to pull some money out of their property. We want to know where it's going, okay? And the answer can't be, I'm going out to Vegas betting on black, okay? Especially if you have a large cash out. We want to get down into that because the lenders are going to want to know. Some of the cash out questions, what are they doing? They may be remodeling. That's a really good one. They may be buying a new location. That's a good one. They maybe just need working capital for their business. They may be buying out a partner. What's really important about that is not only for the lenders what the use of funds are, especially if it's a lot of cash they're trying to pull out. That question is also loaded for you on how you're going to qualify that particular candidate. And again, we have a specific course on qualifying. It's really important to find out use of funds because, again, this is one of these questions that's going to tell you if you have a loan or not. If it's, I got some equity in my property, I figured maybe I could do something with it, I'm going to tell you right now, put them on ice. Put them on hold. Give them let Meg quote a price or whatever, because if it's a vague answer on the use of funds, you really have a 50-50 deal. Maybe they're going to take a loan, maybe they're not. What will happen 9 out of 10 times if it's a willy-nilly answer is they're going to say to you, you know what, I don't want to pay all these fees and have to go through all this or spend $2,000 on an appraisal. I just wanted to see what's out there, okay? Use of funds is also going to be a qualifying question for you. Divorce, believe me, they want to close this deal. Buy out a partnership that's going sideways, yeah, they're going to borrow this money. Their pizza ovens went down, yeah, they're going to need to do this loan. Use of funds is need. What are they borrowing this money for? We are pain sellers. We sell pain. We sell solutions. The bigger their problem is in use of funds, the more likely you're going to put $10,000 in your pocket and close a deal. Use of funds is vital, okay? The next one, loan to value. Okay, LTV. What is the LTV? All loan to value means is how much money they're borrowing according to what their property is worth. The simplest way to calculate LTV, I'll give you an easy one. If the property is $1 million and they're borrowing $500,000, half, it's 50% LTV. Okay? It's just a percentage of what they're borrowing according to what their property is worth. That's loan to value. If it's $1 million property and they're borrowing $100,000, that's 10% LTV. Most of our loan programs in 2014, we max out at 70% LTV. So if it's $1 million property, most programs we're going to be cut off at $700,000. That's going to be the maximum loan that we're going to be able to give. Now, as the economy starts to turn around a little bit, that LTV number will go up. If you have a very generic property, primarily a multifamily, which is apartment complex, we may be able to eke out that 75, and they're starting to look like 80. But right now, 70% LTV, if somebody says, well, what's the max LTV? 70% is your safest bet or lower, okay, just in this market. Property type. I'm going to go through those. Multifamily, all a multifamily is an apartment complex. Typically, a multifamily is considered anything 5+ units. We do 1 to 4 units, so if somebody wants to buy a duplex or triplex or even a single investment program, that's typically considered residential. We do have programs that we can do them as commercial in this market, so that's something that never was exist. So you can make real good money if you find some investors that want to do the one-off properties. But 5+ units is typically what a multifamily is. It's just an apartment complex. Mixed use. A mixed use is where there's a residential component coupled with commercial property. The best type of mixed use is a restaurant with a couple apartments upstairs. So residential component along with a commercial, that's considered a mixed use property. Retail is retail. Retail is a storefront type property. Strip mall is typically retail +4. So you can get a small strip mall, a big strip mall. Office is office, that's just office. Warehouse is a warehouse. Self-storage is a self-storage, and then you have other. Now, if you get other, industrial, farmland, just put other, and then the last property address. This is extremely important. Just put down the property address, because a lot of the lenders, what they're going to do is, before they go out and spend somebody's $3,000 on an appraisal, they're going to look at that property address, and they're going to do their own comps pretty fast. They're going to look it up. They're going to see what the population is. They're going to see what the crime rates are. Believe me, the lenders, they're careful of where they're lending money. So that property address is really important because, again, it's a qualifier. We may pull it up, and it's the crime rate's too high there, or something really wacky, or property values are too declined there that they just can't do the deal. So always get the property value. so the lender can say yes or no faster. It's going to save you time and heartache down the road, so you don't waste time. And we don't ever want you wasting time. Now, property description. This is extremely, extremely important, okay? I don't care if you ask about the property. Even though you think you know what it is, it's a pizza shop, it's a hair salon, it's auto repair, drill down, ask them the question, hey, describe your property to me. Oh, it's a hair salon. We have 2 apartments in the back that I didn't show you. Property description. Sometimes the description of the property could be a deal killer if they have chemicals on the property or something really oddball, industrial. Always get a detailed property description. The fuller that box is, the faster you're going to get down to know if you're going to have a deal. You're going to make your life and Megan's life a lot easier and the lender's. Always, and I don't care how generic the property might seem, always, always, always get a detailed property description. Every single deal, okay? Borrower's credit. Some are going to know, some are not going to know. Most people know where their credit is, good, fair, or poor. If they have their mid-FICO score, that's fantastic. If they tell you their mid-score is 750, ask them how they got that number. Did they run their credit? Is it freecreditreport.com? Did a lender just run their credit? If they know their mid-FICO, another qualifying question that for you, believe it or not. Yeah, my credit's 780. Mr. Barr, where'd you get the credit score? That's interesting. You know your mid-FICO just like that. Oh, I'm working with another mortgage broker, or I'm working with my bank. Good qualifying question. Are you competing for somebody's business here? You need to know these things up in advance because it's going to save you time, okay? If we're involved in a bank competition, literally, believe me, you don't want to spend 45 days working on a deal and where we had to sharpen the pencil so tight that you're making $50. We would rather cut it loose in the beginning and let them come back to us if their bank turns them down. Again, we just want to save your time. So mid-FICO, if they know the score, tell them, ask them the question how, because that's important. Okay, borrower's income, very, very important. What did they make the past couple of years? How's your income? Are you showing any losses? We love losses on tax returns. And if they have losses, they're going to be sheepish sometimes about telling you. But here's the deal. In the end, when it comes to lending, we're going to qualify it all, okay? We're going to need their tax returns, even though their losses are going to be irrelevant. People don't get $500,000 loans or $250,000 loans if we don't do our thorough homework. So we're going to need those returns, but losses are okay. But ask them the question, how's your income? How's business been for the past couple of years? The weaker that answer, the better for you and the better for us, because we're going to have to put them in a specialty program, and there's more fee involved, and they're going to appreciate it because they've probably been turned down a ton if they have losses on their tax returns. Now, last, property income, another vital question. Make no assumptions. Ask them. Somebody says a pizza shop, don't assume that it's their pizza shop. I have a Dunkin' Donuts deal that I'm looking at right now. Well, it turns out the woman doesn't own the Dunkin' Donuts. She just rents the property out to a franchise person. So ask what the property income is in the income questions. Every single piece of this form serves a purpose, and there are underlying information that the answers to these questions are going to let you know if you have a real deal or not, like that FICO score question, okay, or income questions, or use of funds questions. These actually, they're needed for the deal, but they're qualifiers so that you know that you have a real deal. Me personally, I see an executive summary with losses on the tax returns. They have decent credit. And they're in a situation that they got to buy out a partner, or they have an opportunity that's coming up and they need the money by Friday. Those are the deals, if it has problems to it or it has a real need to it, that I get excited about. Anybody who's vague about use of funds, be very careful because they're going to waste your time. Anybody who's at a ridiculously low interest rate that's pulling cash out has to be educated up front that 4% does not exist in this marketplace unless you're Warren Buffett. Okay, so we a lot of these questions serve multiple functions, not just the obvious. Okay, So that right there is the executive summary. It's not rocket science at all. And now I'm going to open up the floor for any questions you guys might have. Hey, guys. Can you hear me?
Yeah.
Okay. You got any questions for me? Fire away. Go ahead.
Hi. Got a quick question for you here.
What is DSCR?
What is DSCR?
All right, good. It's not on there. Okay. It's debt service ratio. Okay. The quick lesson on debt service ratio, and this is an important one, and it probably should be on the executive summary. I don't want to scare anybody who's new to the business, because you start getting into debt service ratio and things like that, and people are like, oh, my God, I got to go back to school to learn all this stuff. In simplest terms, debt service ratio is a percentage of what their income is compared to what the loan payment is going to be. And I'll give you an example. A typical debt service that a lender's going to want to see is 1.25, okay? All that means is this. If they're going to give you a mortgage and the mortgage payment each month to the lender is $1,000, they're going to want to see at least on the property's income 1.25. So $1,250 of income they want to see coming in on the property to give you a loan where the loan payment is $1,000. Okay? All it is a ratio. So typically the lender wants to see you making 20% more than what the mortgage is going to cost. So if it's $1,000, they want to see $1,200 of income coming in. That's all debt service ratio is. Some deals have a different debt service ratio. You're typically good at 1.25. Apartment complex is a little lower, but don't worry about debt service ratio. You leave that for us until you guys are all experts at this stuff. Don't worry about the debt service ratio. We're going to do that, but all it is the lender wants to see income that can at least show that it can service debt service at a certain point. It's usually 20% or 25% of what the loan payment is, but that's an awesome question. Next question.
Hey, Chris, it's DeAndre. How are you?
Hey, DeAndre. How you doing, bud?
Good, good. You spoke a little bit about the FICO score. What services should we watch out for? You mentioned the free credit report score and all of that.
Yeah, you got to be careful with any of the free credit report or credit karma and all these things, because they're not actual FICO scores. Meg has the way that somebody can get their real mid FICO score for free. So, I would follow her guidance if anybody doesn't have a hard credit pull. Meg can show them how to get it for free. But just anytime that they have a free, if you get something that comes over that says freecreditreport.com or Credit Karma or something like that, I just want you to take it for a grain of salt, because it may say 700, but then when you do a hard pull, they're actually 620. And not that we can't do any credit score with certain deals, it just changes it could change the lender, or it could change the program if it's a wild swing in credit. So just be careful of any of the stuff that they get for free. Or if it's not current, they may say, oh, last year my credit was, 700, and okay, how was still bad last year? Oh, we got killed. I'm paying stuff for the business on my credit cards. Well, if their debt has gone up, their credit score has gone down.
Right.
So just be leery with that. But I would follow Meg's guidance if you need to get a free credit report for somebody that's accurate.
Got it.
But
thanks.
Good question. Anybody else for me? Okie dokie. Next Tuesday's call, I don't have my syllabus in front of me, but it'll be 1 o'clock. I am going to be sending out what the live training calls are. We are going to have some really wild guest speakers on Thursday, so pay attention to those. We're going to be recording all of this as well, so we do understand that people have day jobs. If you can't get on one of these afternoon calls, we are going to record it all for you guys. Also, just please feel free to use me for anything. My email address is my first initial last name, Perez at drexelbrothers.com. No question is too small. Again, the origination is important. Get your name out there. Become the expert. What I can tell you is we're doing a lot of we're coming up on fall, and we're going to be doing a lot of traditional advertising, which will mean a lot of leads and business for you guys. We're going to start waking up the mortgage brokers. So everybody that's immersed in on this and makes these training calls, and we're seeing the questions from, we are going to feed you, okay? Because this will break loose at a point, and there'll be more business than any of us can handle. So make sure you're trying to make these calls or getting through the training. Make sure you know your business. I love the question on debt service ratio. It just means you guys are paying attention to some of the questions that are out there. If there's any complexity to it, just send me an email. Again, Meg is more the actual deal person to get into the root of the deal. Anything about our business, you contact me. I will tell you, everybody on the phone or anybody who's been grandfathered in, anybody that you recruit or you send to our training calls, I do a training call now, an intro to our company call. I do it 3 times a week at noon, Tuesdays, Wednesdays, Thursdays. Anybody you drive to those calls that signs up, we are now cutting you a check for $40 immediately. And more importantly, you're going to get a 1% override as long as they are an active LPM. That's going away for most of the population. So if you do know some people, you want to do some recruiting and build a little residual income, you're all grandfathered in, everybody that's on this phone. Just use me if you need me, guys, and we're here for you. I am going to send out an email with the new call-in numbers for these training calls, and I'm not sure who your guest speaker is on Thursday, but I will talk to all of you next Tuesday. Thanks for jumping on, guys.
Thanks, Chris.
Yep, my pleasure. Bye-bye.